Supposed to be live right now. Double check.
Yeah, man, it's active.
All right, let's start. All right, guys. Welcome to another installment of the CBD Sundays with yours truly, Pip the Piout. And we also have Currency Meech as well. So I'll be going first and doing my chart breakdown of the chart that I have right now in front of you, which is the XAU USD, aka the gold chart. All right. All right. Give me 1 second. All right. Great. All right. So, first things first, let's mark off the institutional levels in which the market is currently around. All right. As you guys may know, institutional levels are the whole numbers in the market. Institutional levels are also called psychological levels. And this is a form of right here, which is a form of confluence in which I use personally to um take trades, stop loss. No, not stop loss, take trades, have or take profit be at institutional levels and also look for entries along institutional levels. So as we usually do, we normally do a top-down analysis, right? Looking on the monthly time frame and then transitioning down to lower time frames. All right, so based on the monthly right now, we are seeing a bit of exhaustion. This was due to the last day, the close on Friday, right? So if we're supposed to go on the daily, almost all of the exhaustion is caused by the Friday's daily candle, right? So just a bit of retracement to continue the overall push. I have a couple of articles in which I read over the weekend, which indicates fundamentally wise, we're expecting gold to continue push. They're saying that they expect gold to be at 5,000, the 5,000 region by 2026. I think it'll be there before. Maybe so, maybe not. Let's see. Because these past, well, I'd say just September alone is the biggest month so far in which gold has seen right now. This month in which we are in, October, has pushed more than September, obviously based on the size of the candles. And we're still in the month. So let's see if gold continues on this overall momentum to the upside. Amidst, well, I'm expecting a lot of bullish pressure, right? Amidst the US government shutdown. So we're still expecting persons to seek the new safe haven. Well, the same safe haven that it's always been, which has gold. So we have a bunch of persons freshly coming in the market, dumping all this capital in gold, right? To put their money somewhere safe. And it's giving quite a lot. Right? I think in history it went up a few percentages just last month alone. So now we're hoping to see what we can achieve off it based on just this month, but it's all buys for me based on the previous two candles and then this candle in which we have 11 days in. So all buys for me based on the monthly time frame and based on also the fundamentals, right? So let's drop down to the daily time frame. Let me go ahead and clear up some of these. Yeah, I think that's fine. I think we can take off that. All right, so let's drop down to the daily time frame. Yeah. So based on the daily time frame, the day has just started, so we don't have much volume in this candle right now. and we can't really confirm or deny anything because the market is just a few minutes in, right? A few hours in, my mistake. So yeah, again, we're operating off the market. If you can notice right here already, if we're supposed to zoom in, the market did give us a retracement to top in the institutional level, and we can already see this on the daily time frame, right? It gave us a retracement on Friday in which it tapped into the institutional levels, and then we'll break this down a bit further. So it tapped into the institutional level, currently forming a support along another institutional level to continue the push to the upside. That's on the daily so far. And as we're checking previously, a lot of bullish momentum based on the past. These are 1, 2, 3, 4, 5 candles before the Friday candle. So yeah, expecting a lot of bullish momentum for this week, going into this week as well. We're looking to fill out all of this volume in which all of this the area in which the Friday candle closed. Right. So dropping down to the 4 hour. Oh, we didn't check the weekly. Let's check the weekly. All right, same thing, same old, same old. This is showing a bunch of bullish momentum based on a lot of bullish candles over the past few weeks. Same old, pretty same as the monthly candle. So we still have a whole bunch of bullish momentum when it comes on to gold. Again, hopefully well, yeah, this week we'll be filling out all of this space right here for this candle. So we're hoping to take out this high right here, the daily high, and also the daily low is, as I said, we might get a bit of retracement, but overall aiming to take out this right here, which is the daily high, based on the moves this week. Strong bullish news as well. So drop down on the 4 hour time frame. As you can see right here, we have a level of support in which the market respected on the 4 hour time frame. Right. So let's draw our fib right here as well. We notice a level of support right here as well. Pretty minor, but a level of support nonetheless. Right. Might also be an indecision level. If we drop down to a lower time frame. But so far, the market has given us a level of support on the 4 hour time frame. This was on Friday, and then it came back down, retraced a bit, right? Retraced a bit in the same level of support to continue the overall push to the upside, right? So if we're supposed to drop on the 1 hour time frame, yeah, we can see it even clearer. A level of indecision in which the market was playing around this area right here, in which it came back to top in the area on Friday. Also at the 38.2 PRZ, the fib level. So this is a pretty solid trade, and we're expecting it to go up. I really don't have much, being that we're already basically in a trade right now to the upside, right? Maybe what we can do is hope for maybe a lower time frame fib, in which we can draw a fib maybe on the 30-minute or so, right? Let me remove this so that it looks less crowdy. Maybe what we can do is draw a fib from here, maybe to this level right here, to that level, in which we can expect a retracement to either this level right here. The fib isn't really completed as yet, so we just have to work off what we have right now. So yeah, what I'm expecting is it's already in the process of breaking this. So what we can do is, let me drop down to a lower time frame. Yeah. All right. So what we can expect is for the market to break above come back, retrace to the same level of previous resistance to continue the overall push to the upside. Let's see if we could draw the fib from this level. Well, as I said, we don't have a valid level of resistance which has formed as yet. Bam. But we're looking for a breakout, basically. Right? We're looking for a breakout to the upside because the market can still respect this level right here, this level of resistance, and still give us maybe a retracement all the way down here. You never might know with gold, and plus this is the first day of the week, and the market opens strong with a lot of volume, right? So going into this new week, well, being that I can only show you one trade for now, going into this new week, just expect a lot of buying pressure, right? And we already had strong based on the daily time frame. We've already had level of we have already had some retracement, so we can expect the bullish volume to finish pulling out all this candle right there going throughout the week. So yeah, that's it for me basically. Right. So remember what we're expecting from gold is to break above this level, this minor level of resistance, to come back, retest it to continue to the upside. So for now, the overall goal for this entire trade is the level of resistance in which the market created. This is a safe zone in which we are safe to trade inside this daily range right here, where we can target the high of the day from Friday, right? Might not be all the way up or all the way down, but that's what we're looking for our next trade. And remember, we're already inside a greater trade, which is the overall trade, which is based off the 4 hour time frame. So yeah, we might get steep retracements, might not, but it's kind of in a risky area, being that the market is already pushing to the upside. So we're already in the process of one trade playing out. But yeah, this is it for now. We have quite a lot of potential right in here. This is over 1,000 pips already just within the daily range right here. So that's what I'm expecting so far. Yeah, and that's it for me for now. Let me go ahead and turn this over to my colleague, Kurrency Meech. All right, give me a second. Yeah, let me just cancel sharing on Zoom. Stop the share. Okay. Yeah, man, you're clear. Hold on, let me check something. Let me just check something real quick. Because I'm still seeing my screen and the chart. Yeah, let me just fix that. Oh, you know what happened? You look like I stop the recording for the screen sharing for the wrong thing. Right, let me see. Yeah, for the live itself. Uh, so I'm just trying to, I don't know how, if you stop it, how you start it back. Yeah, but it's showing me that um the screen sharing stop for OBS Studio. So No, you can continue share your screen, but I'm just trying to fix it on my end. Alright, so it seems as if I have to go stop the screen share and start it back. Yeah. Alright, let me stop it real quick. It has shown me the old chart. Alright, so maybe what I'll have to do is end it and then start it back. Yeah?